Hello and welcome to Connect, the weekly podcast of the California MBA, featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy you could join us today. Before I get to welcoming today's guest, I'd like to thank our 2024 President's Council sponsors. Now, these are companies that provide additional financial support to our association, in large part so that we can continue to be the strong voice for the real estate finance industry before the California State Legislature and our regulators. So very grateful for their additional support, especially in a year like 2024 when we're fighting so many things here in California. So please join me in thanking our President's Council sponsors, and those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year. We really appreciate it. And that brings me to today's guest. I'm very happy to be welcoming Sal Miosi, who is President and CEO of MGIC. Sal, welcome.
Thanks, Susan. I'm President and COO of MGIC. Just want to make sure we clarify that.
Had that correct, Chief Operating Officer. Yes, we have that correct. So thank you so much for being on Connect. I appreciate it. I always like to get started finding out how people got into the industry. So why don't you tell us how you got into the mortgage business?
Well, thank you, Susan. I wish I had a great story for you. It's not so great. Me joining the mortgage industry, like many others, was kind of an accident. It wasn't intentional. And for me, it goes all the way back to college. I joined MGIC the summer before I graduated as an intern, or as my boss back then took all the glamour out of it, called the cheap college help, which I was happy to do because at the time I was working at UPS. I was loading and unloading trucks, and it paid quite well, but I wanted business experience. So I took a pay cut to join MGIC, and here I am.
Wow, that is cheap college help. We've all been there, right? Well, one thing I was looking at when I was looking at your history and your LinkedIn profile and information about you is the length of time you've been at one company. I mean, it's not common to see somebody at one corporation for so many years, and you've been at MGIC for quite a while, and that's a great story. Congratulations. Not a lot of people can do that. I would imagine it has a lot to do with the corporate culture at MGIC. So can you share a little bit about the corporate culture at the company?
Sure. I mean, my longevity is not really uncommon at MGIC. It happens quite often. So it's not, it's fairly common here. I had been here 36 years, which is a little gaudy now that I'm working with people who are younger than that. It kind of blows their minds. So I've become one of those people, which is a little scary. But I really have been blessed with so many opportunities and a great environment that allow me to grow personally and professionally. I was also really fortunate to join MGIC at our headquarters location, which allowed me to change disciplines and departments and subsidiaries without uprooting my family. But you're right, our culture is at the center of my longevity here. And ultimately, I think that's because our corporate values were strongly aligned with my own personal values. So working at MGIC has always felt very natural to me. I could be the same person at work that I was at home, albeit when I got married and had kids with a lot less empowerment at home than I would have at work. But ultimately, it was something very easy for me to do. And as I think about our culture, it is kind of hard to distill our culture in a few words. We don't have posters, and maybe we should get some. But if I had to pick a phrase, it would be "do the right thing." Kurt Culver, who was one of our former CEOs, would routinely say that. And he would say it on the podium, and he'd say it, behind closed doors when we're, facing challenges. And we certainly had our share of those over the years. And it proved to be a really good North Star for navigating both those challenges and I would say the day-to-day. And I still think it embodies how we approach our work and how we treat each other. And ultimately, I think it manifests itself in what I believe are our two most enduring differentiators: our approach to customer service and in the relationship and hopefully the trust we've earned with our customers.
Boy, this is a relationship business, and you couldn't have hit more on the head. Customer relations and relationships with your, with your clients and customers. And it is, again, congratulations. Even though it's been easy for you, that is impressive. So congratulations on a long tenure with a great company in the mortgage.
Yeah, I wouldn't say it was easy, but it was just easy to be myself, Susan. But I don't want to imply it was easy.
I'm telling you, the last 20 years in the mortgage industry has been anything for me, anything but easy. I can appreciate that, but it's I get what you mean. Easy. The company made it easy to stay there, I guess.
Sure, exactly, absolutely.
Another thing I noticed that you recently won the University of Wisconsin-Milwaukee Alumni Association Award for Outstanding Achievements in Technology, Operations, Marketing, and Strategy. It seems a huge recognition. Congratulations on that. How did you react when you heard that news?
Well, first off, thank you. It was really a pleasant surprise and totally unexpected. My gut reaction, quite frankly, is I thought the call was some kind of spoof. Maybe I'm inundated, maybe we all are, with so many unsolicited phone calls and emails. And now what were emails have become phone calls. So someone calls me, I'm driving, they want to verify my identity, and they tell me they have great news for me. And I'm thinking, okay, at what point do I hang up? And thankfully I didn't. I did ask for email verification. And when she copied in people who I knew from University of Wisconsin-Milwaukee, I figured it was legit. And obviously my reaction to it, that I was certainly humbled and honored to receive it. And really, certainly receiving it was a gift, but what was also a gift is that it caused me to really reflect on my career. And there's so many people here who have helped me along the way. Of course, my family and my friends and my coworkers, and colleagues. So I had a lot of feelings of gratitude. So it was a fun evening with colleagues and family.
I bet. That is, again, it's wonderful to be recognized by your alumni association like that. So again, I thought that was pretty cool on your profile as well. MGIC has been involved with California MBA for a number of years. I know that the company provides a wide range of resources for lenders and borrowers. June is National Homeownership Month. How is MGIC helping to access sustainable homeownership?
Yeah, I'm really happy, first off, that sustainable has become an enduring part of the narrative. I think if the housing crisis taught us one thing and we took one thing away, is that homeownership needs to be sustainable. And supporting sustainable homeownership is our mission. It's really what we're all about. And at the center of that mission is our core product, which is mortgage insurance. Right. And with home prices being where they're at, the need for mortgage insurance is greater than ever. I know this is not a surprise to anyone on this, who's listening to this podcast, but a $500,000 home is not uncommon for a first-time home buyer, especially in California. That might even be a little low. And to think of having to save 20% for that, $100,000, that would make home ownership untenable for so many people. And if it were to be tenable, it'd be a decade out. So, our product effectively as core allows someone to get that home with 15 grand, as little as 15 grand versus 100 grand. And with that, buy that home sooner and realize the benefits of home ownership sooner. But, what we do has always gone beyond just MI. We've always had a vested interest in helping our lenders and helping our lenders help their borrowers. For example, we provide training for lenders, both technical training and soft skills training in various aspects of customer service, selling, and then technical aspects like underwriting a self-employed borrower or understanding a condo appraisal. So we certainly support lenders. We also we don't directly interact with consumers, but we help lenders support consumers. We have a website called readiness.com, and that website has a bevy of information and resources for consumers, and lenders can send their borrowers there or have borrowers go there on their own to better appreciate the home buying process and what they're getting themselves into, and ultimately better prepare for home ownership. Beyond that, more strategically, we're of course, we're of course committed to helping the underserved achieve home ownership and help close the racial gaps that we have in housing. And we're actively engaged in equitable housing locally in our own backyard and in other markets, but also nationally. And we're involved in various policy agendas. We have various partnerships, Fannie and Freddie and the MBA, of course. Research, we recently sponsored a data science study that looked at the root causes of the housing gaps and ultimately the impact of those. And then we take those learnings back into our product to ensure that we're serving as many borrowers as possible.
It's fantastic. It's a sustainable home ownership, right? That has a nice ring to it. We want people to be able to achieve the American dream, get into that home of their dreams, and have a long time there. So congratulations on recognizing all of those wonderful things that mortgage insurance brings to the industry.
Thanks,
what are the primary areas of focus for MGIC for the balance of 2024?
Yeah, the balance of 2024 sounds so weird right now that we're halfway through this year already. It of course continues to be a tough environment for lenders and for borrowers that's constrained by supply and affordability. So working with our customers to navigate through that is a top priority. Our primary focus doesn't really change much from year to year. I mentioned already our focus on our relationships with our customers and our customer experience. We can't and we won't take that for granted, and we'll keep working on that. We'll keep working on programs and products that support sustainable and equitable home ownership. So that's going to be a focus. An area we haven't talked at all about yet is really our focus on analytics and data science. We gather a bevy of information on borrowers and on lenders as part of the application process. We augment that with external data. We know how loans perform, whether they prepay, whether they go delinquent, and then we can use all those insights and apply them to how we interact with our customers. So I don't see that being something that goes away. It's something that we're going to keep focusing on and make ourselves better. So it's something that I see, while we're really proud of our relationships and our customer service and our broader customer experience, I see that being a real emerging differentiator for us in the marketplace and how we serve our customers. As for the environment, we don't see that changing much in the near term. So the environment we've had these last 6 months, probably what we're going to end the year with. Now, I'm not going to predict the environment beyond that. Our company's been around 57 years. I've been around a while as well. I've learned that I can't predict the environment, beyond maybe 6 months. But I guess, what I have learned is that cycles change. So I guess that's the good news in all this, is that the cycle we're in is going to change. What may be the bad news is that the cycle you're in oftentimes lasts a little longer than you thought it was going to last.
Yeah, that's something I'm hearing from lenders as well. I mean, 24 has been a more positive year on the balance, I think, but we're probably need to hang on for a little while longer, maybe than we thought. But thank you for sharing kind of the focus and the data and analytics is critical, I think, to so many companies. And thank you for including that in our conversation. Sal, MGIC has been a member of the California MBA for many years. We're very grateful for your support, membership, by the way. Can you share with our listeners why you choose to support our organization?
Yeah, we've had a great partnership over the years, so thank you. I say the National MBA and the state associations are an important part of the mortgage ecosystem, and we're part of that ecosystem. And certainly California MBA advocates and provides resources for our industry and also in turn for homeowners, future homeowners. Additionally, for us, California is a very important market. We have many great customers, of course, that are domiciled in California. We have many great coworkers who are domiciled in California. And California historically has been one of our larger states. So we get a lot of business from California, and California has also been a hotbed for innovation in tech, in process, and in mortgage product. So it makes a lot of sense for us to have an active presence in California and support of the CMBA as part of that.
Well, we greatly appreciate it. Thank you so much. It's been a long time, and we are appreciative of all our members, but especially our long-term members. So thank you. And Sal, it's been great having you on Connect. Thank you so much for joining me.
Thanks, Susan, and thanks for all you do for the CMBA and our industry.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.